Hi, everyone. This is the Vantage RM weekly video update service here on Sunday night. If you're new to the channel, what we're looking for is risk. We are a risk management company. We're looking to identify the risk. That's what that RM stands for right there. We're from VantageRM.com. What we're going to talk about tonight is what is the risks in the market, what to look for as we go through this coming week. We always show a dashboard which gives you an idea of where the markets are trading from a risk standpoint. We have a bullish leaning right now in the corn with the soybeans showing neutral conditions. Those numbers there are the technical strength levels. What that comes from is a technical analysis, or what we call the consensus, and that consensus will give us an idea of where the market stands from a risk standpoint as far as buyers and sellers. So right now this leans bullish because of the higher number. This leans neutral as it's in that neutral slot. Wheat is still showing the bullish leaning, and the rice market is also in a neutral slot, same as is the soybeans. So now we're going to show you what the market is doing tonight. This is at 8:01. This is how the market is trading. And I'm going to start up here because the market tonight is trading this number right here. That is the crude oil contract, $3.43 higher. This is off the Houthi attack of Israel, and it looks like that they may be entering the war. They, of course, are in Yemen, so they could be in a position where they could affect more of the transport between in the Gulf of, well, not in the Gulf, but in the Strait of Hormuz. So we'll just have to see whether or not that occurs, but that is what is driving the markets tonight, is this number right here. And you can see the diesel contract is up 14 cents. Natural gas is down 9 tonight. The gold market's suffering. It's down 54. The U.S. dollar's not doing all that much. It's only up 28 points and off of the high by about 160 points. On Friday, the Dow was down 793. It's in a corrective phase at this point. And tonight, it's down another 300. And again, this is off of the headline news. Well, this action in the energy markets has the corn market higher, up 3 1/4, 3 1/2. Soybeans up 7 1/2. We've got the soybean oil currently up 81 points. This is after the RVO announcement also that came out on Friday. Soybean meal is unchanged. Wheat's up 6 1/2 in Chicago. Kansas City up 5 1/2. Weather markets here for the wheat. The rice market's seen some nice strength tonight and some very heavy volume, up 27 cents there. We're not going to show you the cotton because cotton market hasn't opened. So on the chart, here's what you need to be watching for as we go through this week. This is the 21-day moving average. There'll be a lot of technicians following that. Remember, 21 days is about the number of days in a month. So that gives us a monthly average, at least over the past month. And if we start to see the market close below that, there's going to be some technicians that will probably sell it. We do have an objective right now to the downside if we start to correct of about 455. That number changes every day. Resistance is at 470 to 476. So that is the area that the market needs to penetrate to continue to move higher. This is the strength index, and right now it's the strength index which shows the strength of higher highs and higher lows, which is represented in that blue line right there. Lower lows and lower highs is represented in the red line. And you can see the higher highs are dominant at this particular point in time. And that's why we're still showing those blue bars up there, which indicates a bluish or a bullish configuration. This is the risk factor. It has turned back up, indicating the risk now is in favor of the bulls in the market, but the momentum indicator shows that there's been a loss of momentum, and it's showing the loss of momentum on this move right there. So that's the way the corn market looks. On the downside, watch out for 455. On the upside, we need to clear 470 to 476. Here's the soybean still caught in this range from 1180 to 1145, same as it was last weekend. And so that is exactly how it lies as we head into this new week. Notice the highs and lows pretty much equal with each other, but we're still showing a very bearish configuration at this particular point. Sometimes some strength there. As far as the actual market goes, we've got a neutral leaning, and that's because it's picked up some of this sideways action in the beans. I wanted to show you the bean oil tonight because that's going to be key. We did have a hook reversal down on Friday. In fact, no, I'm sorry, that's a key reversal down on Friday. We need to close below that low that we made on Friday in order for it to mean anything. Actually, just need to take it out. Notice the 21-day moving average. The market respected that. And when it respects that, that's something to follow. So we'll see what happens as we go through the week here. As far as the Chicago wheat, 16 is the resistance, 578 is support. Kansas City wheat, we've got 647 as resistance, 592 as support going through this coming week. In the rice contract, we're moving higher. We need to clear 1150. If we do that, we could have a secondary leg up. So a close above 1150 would be a real positive as far as the rice is concerned. In the cotton market, not doing much of anything. Of course, it hasn't opened tonight. We'll see if there's any follow through to what's going on there. The diesel contract, it's higher tonight. The market needs to clear 450 to have the chance of having another secondary leg to the upside. With the headline news, that certainly is a possibility. And finally, the U.S. dollar, it opened higher tonight, but now it's down on the lows. That 103 level is the level to watch as far as resistance goes. And that's the way things look as we start the new week. Hope you have a great week. We'll come back next Sunday and have another update for you. So long.